Hi, hello everyone. So let's start discussion on today's important topic and newly fully government owned bank, that is a national bank for financing infrastructure and development, which we also call as a NaBFID. It is an the dedicated financial institution, guys, and we are going to discuss in this video details of the NaBFID, why the NaBFID is established, what and what was the needed, what was the problem faced by the bank, and what the challenges or the problem government wants to minimize to launch the new government bank, which is a NaBFID, and then its background, and then core purpose and mandate, how the NaBFID is different from the commercial bank, what is the difference between the development financial institutions and commercial bank, and then we will look at some the problems that commercial bank will faces, and how the NaBFID will or the development financial institutions will help them to minimize these gaps which faced by the commercial bank. And then we will look at the partial credit enhancement and in its key innovation done by the NaBFID or done with the NaBFIDs, and then impact on the Indian infrastructure economy, how it is impacted on the Indian infrastructure and the economics, and then we will recap some things what we learn and the quick questions for you guys. If you great to answer, so you will be understand from this video. So before start to detailed discussion on this video, guys, I would like to request you, if you are new to my channel and if you are interested in the development financial institutions roles or the big four organizations roles, or if you are only interested in the risk analyst, credit analyst, or the market risk analyst, or operational risk analyst role, or if you are interested in the quant analyst, business analyst, and the quality analyst role, so please do like and subscribe my channel. I'm continuously creating videos on these topics, and that will help you to get the better opportunity in the market. So let's start discussion on the guys. So the first we discuss on what is a NaBFID and what is exactly the role of NaBFID in the market. So the NaBFID stand for the National Bank for Financing Infrastructure and Development. So itself, the full form of NaBFID show us the key role of the NaBFID is a financing infrastructure and the development. So it will do the finance of the infrastructure projects and to develop the infrastructure market. So these are the key role of the NaBFID bank, and we know it is at the part of development financial institutions. Okay, and the ownership of NaBFID is currently 100% of government of India, and which is in the under of Ministry of Finance. So it's taking care of the Ministry of Finance, and it's fully owned by government of India, guys. So let's discuss on the key regulators for the NaBFID. So RBI has an all Indian financial institution. So RBI is a regulator for the NaBFID, and all RBI issue the circulation for the all Indian financial institution. So that comes under the NaBFID as well. So in India, there are the five development financial institutions or all India financial institutions, where the first one is Exim Bank, NABFID, NHB, and SIDB, and the fifth one, which is recently created, which is a NaBFID. So in upcoming, maybe the rename of the NaBFID has a National Infrastructure Development Bank. So you might be get chance what is a rename for the NaBFID. So that is the Infrastructure Development Bank. So let's move on the next slide, guys. Why was a NaBFID needed and the problem which we are going to solve from the NaBFID. So guys, in the infrastructure node loan. So basically the NaBFID is work in the infrastructure side, where it is act as a bank in the infrastructure side, where all the infrastructure project like road construction, rail constructions, or the port construction, or the airport constructions, the wind energy projects construction. So these kind of the project required huge amount of investment, and the duration of completion or the date of commencement or the commercial operation date will be the after 3 to 4 days. So that duration is no profitable or not revenue generated, and the investment required is a huge. So that gap will fulfill by the NaBFID. So they, if asset liability mismatch, if suppose the commercial bank will fund a 30-year project with the 3,000 crore, so it is and the use in the amount, and the 3,000 crore will lock by the 30 years, and the constructions for that road project, it might be the 5 years. So 5 years they will not receive any amount is a part of the principal. Uh, they just receive the interest rate for the 5 years. So these are the challenges that is faced by the uh, commercial banks. So that they need to develop the bank which will specifically work in the infrastructure sector, and create the and use the source of fund from the pension fund, from the insurance fund, from the PF fund, from the issuance of the bond, development of the bond or infrastructure or the debenture product. So there the comes play in the role of the NaBFID. So it will the bank short deposit, but infrastructure project need to 50 to 30 years. Then the development of bond market, corporate bond market not viable enough for infra. So it is a infrastructure bond, green bond, or the bonds which is in the longer duration, or the fixed rate of interest, or the floating rate of interest, or the GSEC bond which is issued by the NaBFID in the market. Okay. And then the funding gap. India need a massive infrastructure funding for the GDP growth. We know that if the infrastructure are good of the country, then the GDP will grow automatically. And India is need of massive investment in the infrastructure project, and NaBFID will be play a key role in these area. And it is has already the government of India is introduced. We are on the global recognized in 2047, and that recognition we need the huge and the strongest infrastructure side, and it will the grow the Indian economy tremendously. So return of the development financial institution, the major development India in the decades, it is the play in key role. So let's move on very important slide, guys, and there is at least minimum two to questions in the upcoming any exam. So logistic background and the timelines for the National Development Bank for the infrastructure financing and the development. So on the date of March 2021, NaBFID bill is introduced in the Lok Sabha. So on that day, the NaBFID bill is introduced in Sabha. And then March 20th, 2021, President assists the receive. Those President approve, we can form the bank, or we can create an institutions for which we called for the National Bank for Financing Infrastructure and Development. And then April 19, 2021, the act came in force. So one of the act is created, and that came in force in the April 19, 2021, and March 2021, RBI notified NaBFID as a all Indian financial institution. So from 8th of March 2021, NaBFID is considered as an all India financial institution. And in September 2024, notified the public financial institution. So it's an the public financial institution correctly from the September of 24. So let's discuss on the core purpose and the mandate of the NaBFID. So the NaBFID is the core purpose of to the do the long-term financing for infrastructure project. So any infrastructure project which need a financing for long term, so there the key role plays by the NaBFID to financing such project while doing all kind of credit enhancement, credit monitoring, or the transaction monitoring, or to check the due diligence, and then provide the loan. Then the development bond and the derivative market. So for infrastructure, so they will develop bond and the derivative market for the infrastructure project, and they feel or the gap in the infrastructure project while development the bond market or the debenture market for the infrastructure project. Then issuance of guarantee to crowd in capital. So they have the government guarantee in this domain, and they will take the government support and issuance of the guarantee in the crowd fund and address the funding gap in transport and energy and urban development. There has use in the funding gap, and that gap is fulfilled by the NaFID. So let's discuss on key vision and the key missions of the NaFID. So the key vision of NaFID is the be a globally recognized strong provider of impact and investment. So they want to be a globally recognized strong provider of impact in investment and the investment domain. So these are the vision that are with the NaFID, and the mission to principle enable for infrastructure financing with emphasis on innovation, environment, and sustainability. It tells us the lot of about the NAFID. So they want to be a principal. NAFID want to be a principal enabler for infrastructure financing with taking of emphasis on the innovation, environmental, and sustainability. So they care the environmental and sustainability. So let's move on the next slide, which is and the important how NAFID is different from the commercial bank, or what are the key elements that different for the NAFID from the commercial bank. So first one is the NAFID don't have the CASA book like current account, saving account, fixed deposit, or the recurring deposit kind of books like the commercial bank will have. So and it will be the collect the fund from the pension fund, or the insurance fund, or the PF fund, or the issuance of the bond and debentures, or the intermediary financing, or different kinds of financial institution to collect the fund. So ultra long tenure, so loans up to 30 years with 66% loans greater than the 15 years. So the loan are in the long tenure for the NAFID. Then the cash flow mismatching, so repayment the structure right and economic cycle. So the cash flow is mismatching, there is no need to do the cash flow. And hybrid model, private sector efficiency and public sector mandate. So it is to take the private sector efficiency and the public sector mandate in this area. So broader driven flexibility to hire market talent and structure complex deals. So they will go in the market and hire the market talent. If you have talent, so you will definitely get opportunity in the NAPID and structure the complex deals. So let's move on the key role in financial systems to solve the AMM problem. So let's, what are the key role of the NAFID in the financial system? So first point we are discuss, it will solve the asset liability management problem in the Indian financial system, or the Indian banking system. So the bank role to focus on greenfield funding construction phase. So the bank is core focus on to use a different financial finance sources for the infrastructure project while issuing the bonds. So NAFED role fund the long SSN projects with matching the liability. So they will collect from funds from the bond, or the pension fund, or the PF, or the insurance fund, and invest that fund. So which that fund is already in long duration. Then the bond market rate take over operational asset and after stabilize. So it will do that thing and result a better capital allocation and efficiency across the ecosystem. So they will help us the better capital efficiency. So let's move on the second financial role of the NAFID. So channel household saving. So the saving moving from bank deposit to insurance, pension, and the PF. So it will create and the market or develop in the market where the long institution will do not save their fund in the bank deposit. They will save their funds to the insurance pension fund, and that money will move from these funds to the NaBFID, and NaBFID will invest in the infrastructure development. So it will create and the ecosystem where the investor will invest their fund in the insurance, pension, or the PF fund, and that fund is collected from that the regulatory body, and that fund is swept to the NaBFID in the form of bonds or the debentures, or the providing the different kinds of things, and that directly move to the infrastructure project. The pool size, these fund manage the 1 lakh 122 lakhs crore, growing 50 to 18% early. So it's growing continuously and continuously. And the Indian infrastructure industry is huge and play the key role in the growth of the GDP. So the problem was 97% is invested only in GSEC and AAA due to the regulations. So there is no most of investment in the infrastructure project. So 97% are invested in G6 and AAA due to the regulation. So there is to move that G6 fund to the infrastructure project development and creation of infrastructure projects. So that's the key role. And the NaBFID solution is the partial credit enhancement facility. So it's act as a partial credit enhancement facility. So let's move on the next slide, where we are going to discuss on more detail on the partial credit enhancement and the key innovation. So here we are going to discuss something more detail on the partial credit enhancement. So the partial credit enhancement is a financial mechanism where a third party obtain a bank. Here, third party is the NaBFID, provide a limited irrevocable guarantee and contingent line of credit, typically up to 50% of bond issue size, to cover the shortfall and in interest and principal payment. It upgrade a credit rating of corporate and infrastructure bond, reducing the borrowing cost and enhancing the institutional investor like pension fund to the invest in lower rated and long term projects. So the key purpose of the partial credit enhancement is the purpose, mechanism, limit, and the repayment. So let's discuss on these are the launch in for September 2025 and how it will work. So NaBFID give a 20 to 50% first loss guarantee. If losses happen, then NaBFID will take the chance of the 20 to 50% and the impact upgrade the infra bond rating from triple B to double A, and benefits from that is the insurance pension fund can invest safely. They will feel safe to invest in the infrastructure bond, burden investor base, and the base will reduce the borrowing cost and the extend the maturity of these the investment. So these are the key roles. So let's discuss on the impact on the India's infrastructure and economy. If the NaBFID will work successfully and NaBFID will satisfy their objective goal and mission and vision, so then what are the impact on the infrastructure and the Indian economy? So mobilize the domestic and international capital. So we will do right way or right technique to mobilize the investment fund, which will source from the pension fund, insurance fund, or the PE, or the that fund is provided by the development financial institutions. So that will be mobilized and properly utilized, and we have the look on that fund. We properly monitor, track flow of that funds, like inflow and outflow of that funds. Inflow means we check or cross verify the purpose of that fund is properly utilized by the sponsor or the special with the special purpose vehicle, and the we track the outflow or the again inflow for the national development finance institution, and then return back that fund to the insurance for insurance organization or the pension organization or the PF organization or the bond market to check that in look on the entire ecosystem or the cycle of that thing, and improve the credit assets of the largest project. So it will increase the credit of that largest project and accelerate the economic development. It's increase the economic development of India and help to grow or boom the Indian economy, and then strengthen the financial ecosystem. It is the part or the key area where the financial one of the broader institution need to be tracked and mandate that thing. So it will be the strength in the financial institution and support the sustainable and the infrastructure growth. So it will help that thing. So let's discuss on the key recap in this video, so that will help you and for help you to forever remember this thing. So in aspects like what, so it is and the development financial institution, and it is regulated by RBI, and it is comes into force in 2021 by the regulatory by the Lok Sabha bill. So why bank can't do 30 years loan? Yeah, you from this video you can understand. So bank are not able to do the 30 years loan and wait for the 5 years, so where they don't receive any penny amount for the principals. So how the uh, long loan and the partial credit enhancement guarantee. So it's work given the long loan and act as a partial credit enhancement guarantee for whom? Road, power, cities, and infrastructure project, or to develop the infrastructure, or the rail construction project, or the port construction project. At the result of that, the more infra and less bank trace. So trace on the bank is very well and issue the bonds in the market. And then discuss on the questions. Why can't the commercial bank alone fund on the infrastructure, and how does the so use these questions for you to answer and try practice for these guys. So once again, thank you so much guys is attending that interesting video on the NaFID, National Bank for Financing Infrastructure and Development. Once again, thank you so much guys. Best of luck for your next opportunity. Thank you so much guys.